Hey, good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for September 11th, 2018. So this morning, we have kind of an interesting dilemma in the market. Yesterday, I was mentioning caution to be careful not to chase, and this morning I'm going to reissue that caution, but we're going in the opposite direction. Be careful not to chase. One of the things we saw yesterday was a classic pop and drop pattern, and you never know when that's going to happen. When you get that morning emotion, and it's so easy to get caught up in that fear of missing out, and that market pops up in the morning, one of the last things we should do is chase that, particularly when we're at or near market highs. We chase that, we get caught up in that fear of missing out, and then we end up with something like what happened yesterday here in the Dow. The diamonds in the Dow gapping up yesterday nearly 90 points, and then immediately finding sellers reversing the entire day and leaving behind a bearish engulfing candle. Now, if we take a look at a short-term intraday chart, here's a 15-minute chart. So essentially, we gapped up yesterday morning and immediately found sellers, and those sellers maintained that control throughout the day, pushing us back down. That's the pop and drop pattern, and that's one of the things I was cautioning against and being careful not to chase. So what do I mean by that? Well, if we were to go back to that 15-minute chart, you can see on days where we gap and move up, where we put in those good price patterns that allow us to trade long. So, for example, on this day, we sell off, rally back, push back to a higher low. Here's our entry point. Here's our easy trade. And so we want to wait for that proof. We want to wait for proof that we're actually going to get that follow through. And you can see yesterday we didn't get that follow through. Now, the same would be true today. We're looking at a gap down this morning, and actually a significant gap down, but we want to be careful not to chase that gap down. That gap down could do just the same thing that we did yesterday. And so what we want to see is we want to see that if we look at maybe an intraday chart or something like that, we want to see that push down, that rally back, and then the failure here at a lower high to confirm more selling coming in to pressure. We don't want to chase this down, end up experiencing what we experienced yesterday, chase this down, jump in, and all we find is buyers whipping it back up. So that's why I always issue those cautions on those big gapping days, to be careful, to wait, to watch for good quality entry signals rather than chase or getting caught up. And this has nothing to do with intraday trading necessarily. It's waiting for proof of follow through. That's all we're doing. We're waiting for proof of follow through. So yesterday, leaving behind a bearish engulfing candle, and you can see the Dow this morning is now gapping down more than 100 points currently in this gap down, and we're looking at a test of this March support. So here's why that gap up could occur. We could run down here, hit this price support, and bounce right off of that, and buyers stepping in to hold on. So we want to watch this area right here to see if it's defended. If that fails, then we could see sellers follow through to push on to the downside. But if that holds as support, we could see those buyers step in and bring this right back up. So watch that closely. Let's take a look at the SPY. SPY did much better yesterday, holding up better, but still left itself kind of vulnerable to more selling today. And this morning we're getting that gap down into right in here. But notice that we're holding this high. We're holding this breakout high, that all-time breakout high, even with the gap down this morning. So there's another clue that we could gap down into this support and bounce off. That's why we want to wait for some follow-through selling. However, if we fail this level, expect some quick selling to come in, because we can probably plan on the fact that there's a lot of stop loss orders lined up right underneath this area. And if this were to drop through, we could see some really quick selling come into play. So watch that close. Now the Qs, I believe, is the most vulnerable today. And that is because the Qs have already fallen below this key support level. We dropped through there in yesterday's rally back, which looked like it had an opportunity to reclaim that level. Failed to do so yesterday, just simply because we ran into sellers after the gap up open. So what I would watch for here, as you can see, we're selling this morning. We've got this little gap down that's going on here in the Qs. What I would watch for here is if we happen to break this low. If the sellers take over to such an extent that we break through this low, then we would watch probably for some quick selling to come into play, and we would attack maybe down in here for a little support. If that doesn't work, we would watch this price support right in here and then on down into here. Now, obviously, we don't want to see that occur, but watch this right here. That's going to be critical. This needs to hold. If that doesn't hold here, we could see that really quick selling come into the Qs, and the Qs seem the most vulnerable to that attack right now, having failed this support level and being unable to recapture it as support, at least at the moment. Let's take a look at IWM. IWM also held up better than the Dow did, but giving us a little bit of concern. We still need to recognize the fact that even though we were a little bit higher on the day, we did not break that downtrend. And the gap down this morning is coming very, very close to this price support level. So this is that high breakout. We need to hold again. We need to hold this price level. We need to see those bulls defend that area, bounce off of that. Because if they don't bounce off of that, if we drift through, we could easily see some quick selling into the next levels of support. Now, IWM has a trend down in here, so it's possible we could move down in here and still bounce off. But we can still see that quick selling come in if those bulls do not defend that support. So we're really at a critical point here this morning, and a place where we really need to watch carefully this price action and be careful not to chase. Let's take a look at the VIX real quick. The VIX pulled back yesterday with that rally. And so far, we're holding below this price resistance level here in the VIX. We still have this inverted head and shoulders pattern here that is developed on the VIX, which means this morning with the gap down, that could rise up and we could see a test up in here in this resistance area. So we need to see that hold. We don't want to see this get out of control with some panic selling like we had over here in February. Not expecting that. I wouldn't suggest that that's going to happen, just that we need to watch for that fear to be creeping up here in the market. Let's take a look at T21. 22, that 4-week new high, new low ratio. You see we bounced back up here toward that 50% level yesterday, but all that really does is give us an indication that we have, well, plenty of room for an upside move and plenty of room for a downside move. So let's watch that close. No particular clues to direction here in T21-22 right now, just the potential that we could float either direction pretty easily. So this gap down this morning is certainly going to bring us lower and possibly move us down toward this bullish reversal zone, but we have plenty of room that we could move down before we actually reach that point. Okay, let's take a look at the economic calendar. The economic calendar today, kind of a light day. We have only one market moving report this morning, and that's the jobs report here, the jobs report. They are expecting, according to consensus, they're expecting a few more jobs being created this month over last month, showing that labor demand continues to be very, very strong in the United States. If we take a look at anything else, we've got some bond auctions today. Wholesale trade at 10, Red Book at 855, and we've already had the NFIB small business optimism. So really not much going on there on the economic calendar, just that one report that could move us around a little bit. And then also on the earnings calendar, we have kind of a light day as well, with only 10 companies reporting earnings, and none of those would be market moving reports, in my opinion. They would be very unlikely to move us around. So the market's going to be kind of left to its own devices today, the emotion of the market, and we could be subject to the news. If the tariff talk continues, the hurricane coming in on the country could definitely have impacts on the market. So watch that closely, watch that price action carefully. Don't trade. Trade with discipline. Be wise in your trading. Don't let the market, don't let the institutions influence your trading by pushing you around and pushing your emotions around. Wait for the price action that you need to see before you enter those trades. Discipline, discipline, discipline is the most important thing for a retail trader. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Click the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I do appreciate that. And also always feel free to share this video with any friends and family. Hey everyone, I just want to let you know I put out a lot of training information on my YouTube channel. Please take the time to watch that. If you're struggling as a trader, there may be something there that can really help. I've been doing this now for 13 years full time, and I love sharing and helping other traders do better in their trading. So if I can be of help, please take advantage of that information. Everyone, take care. Have an awesome day. I wish you great profits. We'll talk to you all bright and early Wednesday morning. Take care, everyone.